Hello everyone. Thanks for joining us for our second session of this educational webinar series. With the current dynamic in the crypto assets market, we thought it was good timing, to give fundamental education around this new technological universe. So just before starting our presentation, I'm going to read a disclaimer. So this webinar and its corresponding presentation are for informational purposes only. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. All right. That being said, today the goal is not to talk about products, but again, talk about educational content. So I have in the room today Dramane with me, who is our head of product in the US and in Europe. And today we are going to run through use cases of crypto assets in a real world, but also share some information and some ideas around how to look at valuation for these crypto assets. So I will just start here, with a very brief introduction. But we like to see crypto assets in different segments. The first one, is what we call the cryptocurrencies, such as Bitcoin, that are network to transfer value through a secure, decentralized blockchain. But then, we have what we like to call the infrastructure world that will take into account the smart contract platform, where you can code and program a transfer of value upon certain criteria, and all the layer 2 that are around these technologies to make them, highly scalable and usable. And the last one is clearly the decentralized application, where, we can talk about decentralized finance, metaverse, etc. So that being said, it means that the use case of crypto is something that is pretty wide, right? So obviously, we can talk about, a cross-border payment solution that are almost instant and super secured. We can talk about, tokenization of real-world assets, like commodities, or even, tokenization of stock, of private equity fund, whatever. It's just, having a digital representation of something that we have in the real world, but also the infrastructure of this decentralized network can be super important, especially when we think about the internet and the data, that we give to central counterparties. We think that, Web3 is a lot about, owning your own data. So these are bringing, concrete solution. And then, there's all the world of, metaverse, NFTs, how having like a unique representation of something. Can be art, yes, okay, but it has limit. But mostly it can be maybe proof of identity, etc. So, this can be applied into different sectors, advertising, insurance, loans, trading. And that being said, let's not forget about the concept of central bank digital currency, where in the world of tomorrow, we won't have paper money, right? We'll have, the e-euro that is likely to be, within a private blockchain this time, but we think that CBDCs, if they have to succeed, they will have to have some interoperability features so that they can interoperate with open blockchain, to go beyond just transferring money within a country or a region. But that being said, Dramane, if you can maybe, go through, some example of some concrete use case across different sectors.
Sure, no, thanks, Ben, and thanks for everyone for joining us. I mean, we like to talk about real world use cases because that's where the rubber meets the road, right? Because a lot of people, for people that are not in crypto, it's not always obvious to understand how it's being used. They all hear about Bitcoin and Ethereum or Solana, but how is it being used in the real world? And that's very important because crypto is emerging technology. And we know that in the long run, a new technology wins thanks to adoption. And, we connect a lot of the adoption journey to what value is created and eventually captured, because that's what will justify the valuation of this topic. So one of the cool use cases that we've seen is on the payment side. And I think there's a simple reason why blockchain-based payment rail works better. It's because it's money that works 24/7, so there's no cutoff time, right? 24 hours a day, 7 days a week, and 365 days a year. And you can send it directly to anybody, anywhere in the world, right? So that's really powerful, and that's better than what is available today using the traditional finance rail. And two use cases that we've seen is Cash App, which is a peer-to-peer payment apps that is using now Lightning Network, which is an offshoot of Bitcoin, to enable its users to send and receive Bitcoin. Very fast, very effective. And that's using Bitcoin and the Lightning Network here. And again, the more use of the network, the more value is created and the more value is accrues to the underlying network. Or Google, that given its global client base, is always looking for ways to make it easier for people to pay for its service. So they decided to let the customer pay for Google Cloud using crypto, because that way it's way easier for people to pay Google. And also, even for Google, they don't need to have a bank account in every current country that they are operating in, right? And that is built on, that's leveraging Bitcoin, Ethereum, but also stable coins such as Tether, right? So if you think about the potential for how much payment can process through this network for companies like Google, but it's not just Google, like any other multinational could be using the same network to offer the same services and ease of payment to their client. So that's really cool on the payment side. It works because it's better than the existing payment rail, and it's more accessible than the existing payment rail. So there's a technology advantage to blockchain compared to the existing payment system. And that's one of the reasons why over time we think blockchain-based payment would take market share from the legacy payment system. One other case when it comes to payment is stablecoin, right? Stablecoin is a very known topics and talk about quite a lot in crypto sphere, right? A stablecoin is just a crypto asset whose value is pegged to another asset, and that asset could be a commodity, but most of the time it's actually pegged to fiat currency. So the stablecoin will be actually stable in that currency. So right now, one of the last example of it, basically you're having a US dollar, but a digital US dollar that you can now send very easily and very freely everywhere in the world. So again, that's a US dollar that is superior to the US dollar that I might have on my US bank account that I'm not free to transfer to anybody. And with PayPal, such a large company and such an innovative payment company deciding to use stablecoin, that create a path for stablecoin to take market share from credit card payment, debit card payment, or bank-to-bank payment as well. And that is built on Ethereum, which is the smart contract platform by excellence. And the more use of the stablecoin, the more value is created and the more value flows back to Ethereum. And Ethereum will have more value with thanks to this PayPal stablecoin, but there's many other stablecoin. I think in total there is about 120 billion worth of value in stablecoin today, built on crypto rail. One other example is around supply chain, as Ben talked about, right? And one of the cases is if you are in a very agricultural country such as Argentina or Brazil or even Cote d'Ivoire, you produce a lot of commodity, and thanks to crypto, you could put your commodity production into a warehouse, and you get a digital token that represents the value of your production. And now, since this is now a digital asset, you could go and use it as collateral to borrow money, or you could even start spending it, right? So that's really cool. It's transforming a real life commodity into a token that you can store and spend. And that is built on Algorand, which is another smart contract platform. And again, the link is the more use is made of Agro token, the more value accrues to Algorand. And that Algorand is actually being used in real world use cases. And we have the same with, Starbucks that is moving its reward program to the blockchain by using a blockchain called Polygon, because thanks to the blockchain experience, you could create way more experiences and journeys for your client that you cannot do when it's just a classic reward program that is just on your cell phone and there's not much you can do with it. And there's been a lot of use cases around entertainment and NFT. I think in France, you have you have Louis Vuitton that has been really a pioneer doing a lot of stuff in terms of, transparency and traceability of its supply chain on the diamond side. But now they're also launching the NFT for their flagship, product, for instance. And it's same with Nike that is experimenting with NFTs that could be embedded in gaming. And through NFT, you can have like the digital twin of any Nike or Louis Vuitton bag or accessory that you have, and you can have that in the metaverse and sort of, represent that you have the ownership as well there. So there's a lot of use cases that come to it. And these were built on, Louis Vuitton is on Ethereum, Nike is on Polygon. And again, all of this to sort of show you that some of the blockchain that you've heard about, they are being used by real life companies like big names such as Nike or EA or Louis Vuitton and stuff, or PayPal to create new blockchain-based application. And that's really cool. And that shows you that we actually at the point where these large companies trust the technology, believe that there's enough potential to build something on top of it. So Ben, I think I'll stop here. I think we have the CBDC example. I think you've covered it pretty well. It's just like, CBDC would be the frontier of the central bank using the blockchain technology to create the digital version of their own currency. And that has a lot of use cases when it comes to financial inclusion, because everybody could literally have a bank account with the central bank, and it will make it very simple and maybe cost-free to transfer money from people from peer to peer. So there's a lot of interest in the CBDC bit as well.
Maybe on the next slide, the only thing that I found super interesting is that, Dramane and I, we're located in London, we go to some events, like, we exchange with the investment bank, even if they are not active in the crypto asset market, these companies are embracing this technology just to enhance their processes, right? They see the value of, issuing bonds through blockchain, maybe in a few years issuing structured products through blockchain, or providing liquidity, treasury management products that are just more efficient. So, I think when all the banks are looking at the same thing, it means that there's clearly something to do, but it's still very early. So now we're going to go, on the big topic of valuation that is, very difficult to maybe get, because these are not stocks, these are not companies, behind. But this slide, this is very basic, but I think it's really important to put the base definition. It's always this function, right? The more uncertainty you have on an asset, right, the more the valuation is a kind of an art, and vice versa, right? The less uncertainty, the more it's a science. So I think in this graph, if we were doing this call 30 years ago, Apple would probably be on the left-hand side of this graph, right? But the more mature these companies are, today, technological companies is something that is super mature. 20 years ago, it wasn't the case. And if you think about like crypto assets, that's why we think that Bitcoin, is more at the center, because the first, blockchain, it has a use case that is, known, understood by a lot of people today. It has it's a candidate of a future, digital store of value. And that's why also you have digital culture at the very left-hand side, because, metaverse, NFTs, all of that is still, ideas, concept, and are not necessarily well used. So that's just, a base. On the next slide, you won't be surprised about what we say here, but crypto assets, you can look them as, you can use some traditional framework, right? Especially if these assets have some cash flows thanks to staking returns typically. But it's always about, supply, demand, the fundamentals. Crypto bring another stuff, because these blockchain or open network, you have a lot of on-chain information, such as number of validators, number of users, etc. So these have to be taken into account as well as their tokenomics, sorry, which means how the monetary policy of the crypto asset is built on the code or by the community of this specific blockchain. But last point, and typically the most important is that most of these crypto assets that you hear about, they are projects, right? So we projects, but with a liquidity. So we like to call them like VC, liquid VC. So you apply, the very traditional framework that you see in venture capital, technological investment. So that being said, to go back at the beginning of what I said, payments, infrastructure, decentralized applications. So we're going to give you 3 examples today, and selecting the most mature assets per segment. So for payment, we're going to talk about Bitcoin. The investment case, I mean, it's pretty simple, but we don't really know what it is. Is it a currency? Is it just a network? Is it just a payment system? Is it a potential digital gold? But what we know is that today, Bitcoin has a usage of transferring value, right? Instantly through the internet. It can be maybe a currency solution for people who live in countries where the fiat is not strong. So for us in Europe, maybe not, but mostly, and I think that the narrative of Bitcoin being a gold startup is becoming more and more important and understood from traditional investors. And this only goes because it has superior parameters than the typical store of value that we know. So maybe Dramane, you can detail on that and give us some more insights on how we see this and the potential valuation of Bitcoin.
Sure, Ben. And maybe before moving, I think your point about we don't know what it is, I think that's probably one of the most important things. So it's like we're starting to see what it might look like, but even then it's so early that the potential could be very high. And that's why we use the picture of a platypus, which is, a weird animal it's a mammal, but it lays egg. It has a tail. It's venomous. It looks like, the dark. It's a bunch of things. But all of the things that make a platypus are useful, and that's what creates the optionality. And as finance professional, we like a free option, right? We like a free option because that could create a lot of value over time, and even value that we did not appreciate as a starting point. And I think the way we think about the value of Bitcoin, it's really in terms of Bitcoin, if successful, will take market share from gold and from fiat currency because it has a lot of features that are superior to gold and that are superior to fiat. And that's what we try to sort of represent here, looking at all the characteristics that are important when it's come to such asset and comparing Bitcoin with gold, right? And I think, some of the things that are the most important is like, is it verifiable? Yes, Bitcoin is verifiable because of the code. And that's one of the most beautiful things that we can do. It's like, cryptography is great technology. And thanks to that, we can verify that your Bitcoin holding is true. Is it portable? That's also like a killer for Bitcoin because Bitcoin, if you have 100 million or 1 billion worth of Bitcoin, the one thing that you need to have is just your private keys, which is a string of characters. If you have that, your Bitcoin is safe and it's with you compared to gold, right? Imagine all the infrastructure that you need to move around, 100 million worth of gold, right? So that's very important to people trying to sort of keep their asset, or is it divisible? Of course, Bitcoin as a digital asset is the default layer is divisible because it's even divisible almost to the infinite. So it can be sold in smallest fraction, which is amazing. And the last bit is scarcity. Bitcoin has scarcity by design because we know that the supply will be capped to 21 million. And the inflation, the mechanism by which Bitcoin are created, the inflation rate is slashed by half every 4 years. And that scarcity is very valuable in a world where you have 3, 4, 5% inflation, even in developed market, and less and higher rate of inflation in developing economies. So scarcity, the inflation differential between Bitcoin and the real world is a key advantage. Now, where Bitcoin like is the track record and the volatility, but what it doesn't have in track record, it has it in the fact that it's code and the code is transparent and you can trust the code because it works. And what it doesn't have is, high volatility, which makes sense because it's an emerging technology, it's an emerging asset class, but the volatility over time will come down. And in the context of a portfolio, a 1%, 2% allocation to Bitcoin doesn't drive the volatility of the overall portfolio all that much. So we think given all these, Bitcoin will take a lot of market share from gold, and the current gold market share is like 13 trillion, right? And it will take market share from fiat, which has like hundreds of trillion in current market share. And that's how we can come up with a way to value Bitcoin.
Dramane,
and
just sorry, but
yes.
Sorry, someone asked, why we were writing low, but I just, like, Dramane covered it, but it was a way to say that this is not a good attribute for Bitcoin today, okay? But it's a good attribute for gold. So today, Bitcoin is obviously super volatile, but we think the more the adoption of this as a potential store of value, the less the volatility. So I hope that is clear. Dramane, you can keep going.
No, sure. Thanks, Ben. And I think we are not the only one to sort of start seeing what Bitcoin is, right? We've seen how much of all the large asset management companies have Bitcoin ETF right now because we want to make it available to the client. And for them, it's very simple. It's like, as Larry Fink said, it's international and it transcends any currency. So the addressable market for Bitcoin is not just USD, but it's a USD plus Euro plus all the major ways in which we transact. Or, Paul Tudor Jones, who's like a famed hedge fund manager, he's been one of the early adopters, right? It's like, is one to always compare the way he's seeing the Bitcoin market evolve to gold back in the day. And I think that really captured the two things that we talk about. Bitcoin will take market share from gold, and it will take market share for, the use cases of fiat currency. So it's an emerging store of value that will take market from gold over time. And I think with time, you guys are seeing that Bitcoin is proving its case. I think this year we had a lot of volatility in the market from, the failures in regional banks in the US. But after that, during that period of time, Bitcoin had like one of the best weeks it ever had because people were starting to use it as a safe haven. Even in the last few months, with all the unfortunate events that are happening in the Middle East, right? Instead of Bitcoin being sold off, people actually flock to it again as a digital gold. And we think there's a lot of value in that. And the new generation, there's like a generational element to it, which is the new generation, we think about Bitcoin the way all the people were thinking about gold. And if you guys think about how much money the boomers will leave for their offspring, there's going to be a lot of money for which Bitcoin is gold, or Bitcoin is as good as gold is. And that creates tremendous opportunity. And one last way of sort of thinking about it in a more, I want to say, programmatic manner is to look at different use cases for money and think about how much of that Bitcoin can take over time, right? And I think one of the most obvious one is gold. Even if I'm taking, the bear case scenario, right? If Bitcoin, in the bear case scenario, assume Bitcoin is taking 20% market share from gold, right? That we're talking already about 2 to 3 trillion, and that is 3x to 4.5x where we are today, right? Or Bitcoin could take 5% of the remittance market, right? How much money we are sending abroad. Bitcoin could take that because Bitcoin is cheaper. It's faster than the existing remittances network. And there are many other use cases where Bitcoin could displace the existing ways of, saving or sending money. And even in that bear case scenario, we're talking about, a target of 260,000 almost, which is, 7x, 8x where we are today. And that's one of the ways we like to think about Bitcoin, how much market share it might take from other asset classes. And if you just think about gold alone, right, there's a 3 to 4x potential if Bitcoin were just able to take 20 to 30% of gold use cases. And that's definitely possible in the next 5 to 10 years.
I like to say it's still very early, basically, from what you just said.
Yeah.
So you know, we spoke about Bitcoin. So now we're going to take the example of Ethereum, but mostly here we want to talk about smart contract platform. We use the example of Ethereum because it's the first smart contract platform, is the most used today by decentralized application and the bigger in terms of market capitalization. So that's why, you know, we look at this specific case of Ethereum. But Ethereum, the biggest smart contract platform enable to transfer value upon certain criteria through an open source network. And as a result, if you think about our daily life, right, every day we transfer value upon certain criteria. Okay, so we strongly believe that this base layer of, you know, what is called Web3, DeFi, etc., is where the most of the opportunity is today in crypto assets. Me, I like to call it as the world computer, where the internet of tomorrow will run, maybe Ethereum or maybe other smart contract platforms. And I think the sentence of the founder is super interesting. The value of Ethereum is only in the value of the ecosystem. So that's, you know, just to put the stone here, but you know, we have, I think, 10 minutes ahead of us, then we'll cover some questions because we had one. Just say that. So Dramane, maybe if you can go a bit beyond from what I just said as introductive words on Ethereum.
Yeah, but I think, you know, what you said is, I think that's a core case, Ben, really. So I mean, it's about, you know, building the world machine where everyone would want to build the app. So if you want to build an app that want to serve the whole world, Ethereum want to be the place where you build the app, right? And that's really, really powerful. And it helps you sort of see where the value might be coming from, right? Because if you build your app on Ethereum, if you want to run your app on Ethereum, you have to pay gas fee to run it. So the value of Ethereum will come from people building more and more application on top of it and paying for the ability to run your application on Ethereum. So that's it, you know, world computer that has value because people decide to build on top of it. But then the question becomes, why would people decide to build on top of Ethereum, or what use cases that might be? And that's really what's cool, because what people are trying to do is just to build what they call decentralized application. A lot of them are around financial services. So, you know, thinking about building decentralized banks or decentralized exchanges and all that. But a lot of them are also have to do with NFTs, as we talk about, entertainment. So each of those applications, when they are built on the Ethereum virtual machine, they pay something to Ethereum to run. And that's how Ethereum has value, because it becomes the machine that people use to run it. And you think about the potential of that, it's literally, you know, the addressable market of any large technology company or any large technology infrastructure company, right? We like to show this slide to sort of show people that, hey, it's actually working in a way, right? People are paying two types of fees to use Ethereum. They pay the base fee that, you know, we see the trend has gone down because of the bear market till Q3 2022, but it's been up ever since, as you can see here. So people pay base fee, but you can also pay priority fees if you want your transaction to be executed faster. So you see, that shows the utilization of the network and that people have been using it to create application and to run them. And that's really good from utilization standpoint. And the other thing that it also shows is Ethereum, for the past 3 quarters, or for the past, you know, since Q2 2022, it's actually become deflationary. So net, instead of issuing new token, we reduce the number of tokens in circulation. And basic supply and demand equilibrium will dictate that as there's more demand for Ethereum because more applications are being built, you know, if the supply is actually going down, that creates a double whammy effect for the price. So that's also something very important to keep in mind, the fact that Ethereum has been net deflationary for few quarters following its switch to proof of stake. And if we want to recap really quickly some of the some of the valuation approaches to Ethereum. Like, you know, we really call them approaches because it's early, but there's a lot of ways you can think about it, right? Ethereum generates revenue because people are using the machine and are building on top of it. And because it generates revenue, you can make assumptions around one way of thinking about valuation is, you know, your classic fundamental analysis, you know, a DCF approach, for instance, right? Because we can think about more applications are being built on Ethereum. People are using the infrastructure that will generate revenue. So we can take a view on the revenue that would be created on Ethereum and use that as a discounting it to come up with, you know, a view on the value. That's definitely possible. And I think that's very akin to, you know, if you're trying to think about what the value of, you know, Google Cloud or AWS at Amazon, that's what you will do. You'll be like, okay, how will computing need increase over the next 5-10 years? How much of that will come to Google or to Apple and drive a revenue capture model? So the second approach is, you know, the relative market sizes, and that's, you know, what the consultant way, if you think about it, it's like how much market share can Ethereum steal from the existing solution? And that's when it becomes very, very interesting. One potential market is fiat, right? Because Ethereum can also be used to send and receive value. But the more interesting one for me is the FANG. So the Facebook, Apple, Amazon, and Netflix of the world, right? Because what they're providing is infrastructure to run a lot of the things that we do today. And if Ethereum becomes the go-to place for 5, 10, 20% of the people using, you know, Google, or if the next person that want to build the next Netflix or the next Facebook chose Ethereum as the smart contract platform to create the application on instead of, you know, a centralized option, that enable Ethereum to capture part of the value that is created by these large tech companies. And we think, you know, thinking about Ethereum as, you know, a percentage of how big these large tech companies are is one of the most powerful ways of thinking about it. And I think once you use the fundamental analysis or the relative market sizing analysis, you can then augment it with some of the on-chain metrics, because unlike, you know, classic equity or bond issuer in Ethereum, you have transparent metrics that talks about how many people are using it, how much value is locked on the system, how much network fees, like how much people are paying to use it and stuff like that. So all of this is usually public information that is available that you can use to augment any analysis that you've done. And lastly, the multiple, you know, we have a view of the revenue, and then you can be like, okay, Ethereum is like technology utility, maybe the good multiple is like 20x, or, you know, it's 15x. So you can use all of these metrics. So, I mean, that's just a way of showing you that there's a range of options that we have when it's come to valuing core technology and core technology infrastructure, such as Ethereum, for instance. And I think we have a little bit of time to quickly cover some of the decentralized applications. So I'll kick it off to you to maybe talk about Uniswap, which is one of the cool decentralized apps.
Absolutely. So what I like to say about Uniswap, you know, is that it's a kind of one of the most mature at this stage decentralized application. So this is under the sector of decentralized finance. It's just an exchange, right, to exchange, you know, crypto assets, but the market making is different. It's an automated market making algorithm that will use liquidity pools, right? So contributor go put you know, assets into the liquidity pools, and then the market is made like that, instead of relying on a central counterparty such as you know, Euronext, where people go and animate with bid and offer. So I think, you know, it's a concrete use case. But what I like to say about it is that, you know, it's still very early, right? But if we try to think, you know, about like the world in 5-10 years, right? So we hear a lot about tokenization, right? So, you know, it means that it's more efficient to exchange a token of the total stock than the total stock itself, for example. So maybe these exchanges, right? And I think it's likely that they're going to be, you know, a marketplace to exchange token, okay? But, you know, we don't know. Will Uniswap replace the regulated stock exchange? Maybe yes, maybe no. Will the traditional stock exchange embrace these technologies to source liquidity? Maybe. And what is super interesting, I think, when it comes to Uniswap is that it's still very early. When you look at the revenue, I think it just shows the scale of potential. But today, as I said, it's a decentralized exchange. The token that Uniswap is just a governance token. So it's the community who decide, how this network is developing or is evolving. And it's a technology that runs on Ethereum base layer, among others. So Dramane, if you can maybe show a bit on what I just said around the revenues, adoption, etc.
Yeah, so Ben, I think it's there's maybe two things that I can say just to broaden it up and can take questions. And it's like, one is that revenue number. So Uniswap made 540 million in fees for the last 12 months. And one thing that is very interesting to do is maybe to compare it with some of the revenues figure that you get from even exchanges in the real world. So I think the last time I was looking at it is, I think Euronext, for instance, made 500 million euro in revenue in in 2022, for instance. So that's a good.
Oh, excusez-moi. Sorry, we have an issue. Attends 1 second. Oh, sorry about that. Oops. Sorry for this technical issue. I'm going to share here the slides. Sorry about that. Wait, I think you still see the slides. So sorry about that. We had technical issues. So I will continue. So yeah, so we were saying that some stock exchange just for their exchange activities have revenue that could be very similar to that, but this is just a technological protocol, and as a result, the more adoption of these technologies, the more usage of the underlying smart contract platform, and as a result, the more needs to pay gas fees for Ethereum. In this last slide, we just show revenues over the last 12 months for some of the decentralized application. You will see that most of them today are DeFi applications. So clearly this is the first segment of adoption and of concrete use cases. And we strongly think that decentralized application are at the very beginning. Here, we just compare, the three different worlds and how what are the differences when looking at their valuation. So this was the last slide. We have few questions that I'm going to cover. So one is around building crypto portfolio, how much of each coin, bar market cap, and why. So I think this is something that we'll cover at the next one, where we're going to talk about the opportunity and why we think that index investing makes sense. I would say that these are great technologies. We don't know which are the ones that are going to be the most adopted. We think that Bitcoin has a strong use case. We think that smart contract platform also, and that some decentralized application can bring real added value to what is on the internet, on the financial transaction, etc. So that's why at Hashdex, we collaborated with Nasdaq to co-develop the Nasdaq Crypto Index. And we like to think that we don't know what's going to happen, so we don't try to pick winner and just give pure evolutive market cap allocation. The second question is around the slides. So we will send the invitation for the next session session on Monday, and you will receive the slide of this one into this email. So feel free to consult there these slides. And if you have any question, you know, we are here to help. So yeah, so thank you for your time. It was a pleasure. Sorry again for the technical issue we just had. We will make sure in 2 weeks this won't happen, and see you in 2 weeks. Goodbye, everyone.